Hello, this is Right Side Trader. Today is November 8th, 2025, and this is my weekly market review. I'm reviewing the Russell 2000, that's IWM, on a quarterly chart, monthly chart, weekly chart, and a daily chart. This is all for educational purposes only, no trade recommendation, because as we all know, trading is risky. You can lose money at trading, so please check with your financial advisor. Please check with your significant other, and make sure trading is something that is suitable for you. I'm going to say this one thing. It's not alone that you can't lead a horse to water. Don't even think about trying to make them drink. I just want to show you what I put out there last week. Continue gap and run or done. Doji at the top, showing a bearish looking pattern here. Bearish engulfing at the top. Gap up or evening star, showing a bearish looking pattern over here. That's that. Don't want to get any more than that into that. Let's jump over here to this quarterly chart, maximize this. And on this quarterly chart, we're seeing a lot of wick. When I say a lot of wick, I'm looking at this right there. That's getting a lot of selling pressure. Hasn't broken this high that I say, okay, you're going to stay, but you need to break that high to show me that you're really bullish and ready to go higher. It hasn't done it yet. We're still we're still looking very bearish in this market at this time. It's not a bear market, but it's looking very bearish at this time. That's all I can say. Let's go ahead and go down to this monthly chart and see what we see here. Let's zoom in on this monthly chart. On this monthly chart, we're seeing a red month at this time. Red month, that's this candle right here, red month. It's not really a true good clean bearish looking pattern at the top here on this monthly picture yet, but some people say that's a bearish Pearson. It's all according if this high is above that high right there, but it's looking kind of bearish since it's red and all. So be careful, be careful, be careful. We're still above pivot at this time, and we're still above the 9-10 moving average. So technically, we are still, in my big picture, we're still in a bull market and all. Let's go ahead and go down to this weekly chart and see what we see here. On this weekly chart, we do see the bearish pattern here. Last week, we had the bearish engulfing. We've gotten the confirmation candle and all. And we are below pivot at this time. We came down to an R1 and got and below an R1 here and got a pretty good push back up and ended up closing above R1, but still being below pivot. We need to see if this market is really ready to turn around. If this market is really turning around, we will get a candle up this way instead of a candle down below pivot. We may not break this high come next week if this thing does decide to turn around, but we could get a continuation. And if we get a continuation, it's going to be really pretty bad. Because now if we get a continuation, we better start looking out and see if this thing going to come all the way down here to the 50. And that's a pretty good drop. Yeah, it's only like 20. I say a pretty good drop, but it's 40-20. It's only like 20 points. That usually take a couple of weeks for the Russell to do something like that. So if it's going to happen, it'll be a couple of weeks before it actually gets down that low. So just be careful, be careful, be careful, be careful. The downside is still in play. That's all I can say. So be careful, be careful, be careful, be careful. Any bullish traders out there at this time. All right, let's go ahead and go down to the daily noise and see what was happening this past week. This past week, again, it gets back where the Russell was already. I just cancel that. It's on my other screen. The Russell was already in a downtrend. That was the whole thing. So the Russell played to the downside. It was kind of like a no-brainer, and that's what kind of upsets me, where I don't play it to the downside like I should. I just start protecting what I'm holding more so than anything than playing it to the downside. My other trader partner, cousin, she played it to the downside, made good money and all. And I just don't do it. I don't know. It's a problem. It's definitely a problem. Something that I want to work on. Come here. I'm beginning to try to get where I buy at least one put a week when it gives me. And I can do it and just do it on a short term. It's just one of my put scaps. And I'll just do it when I see it, when my indicators give me that, since we are kind of like in a short-term bearish trend. and see how that works for me. And right now, since I'm talking about doing it, and I got this big green candle here come on Friday, this market might be ready to reverse, and that's when that's how it goes. I say, okay, I'm gonna play it to the downside, and usually I don't want to do it until when it's done. But that's it. I'm talking too much about myself and how I do things and how I can screw things up in a bear market. Going to the upside is easy, but in the bear market, I've learned how to step out of the way. So that's the only good thing about that. But that's it. That's pretty much on this thing right here. Come next week, we are looking like we're going to be above pivot right here. And if we do end up that first day, we could be reversing this and heading back to the upside. So we just got to kind of like wait and see what's going to happen here. But we got a pretty good. We're at a level where we might definitely get this bounce here, as you can see what we did before. But we didn't go too much higher. We have to kind of just wait and see what's going to happen here. That's it. That's all I really want to share here. This is Right Side Trader. Beginning to mumble on. I hope you guys had a great week. Hope you guys have a great weekend. And I'll talk to you later. Have a good one. Bye.